please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Okay, 75 as we speak. There goes the bell, and the markets are in a spot of green and building on it actually. 0.5% higher, 56. Let's see if it holds. 11,300 has been scaled, and we have to see if it's able to maintain this. I think Ashwini was telling us that he will take a call only at 11,345, and that may be a contra call, a sell call. Mediables Housing is quite clearly the cynosure of the market, the leader. 5% higher on that stock after the numbers, which were really mind-boggling. I think it was a 50% growth in net profit if you looked at it year on year. Yes, 55% higher. ONGC, again, numbers were decent, especially the EBITDA growth, 20%. And that stock is up 2.3. Kotak Mahindra Bank is up 1.5. So it's not a whole hog thumbs up, but it's definitely in the green. I guess from now on, it will be suspended animation till you hear from RBI. Sun Pharma 1%, Titan 1%, Bajaj Finserv 1%, and Yes Bank almost 1% higher. Reliance also 1% higher. It's got that added sweetener of that tie-up with SBI, and given Jio's ferocity, it can make a world of difference to how we pay because of the SBI link with the Jio app. I mean, for the sake of digital payments, I wish this does very well. The kind of clientele that you get with SBI is so huge. Yeah, then other stocks, yes, distribution, absolutely. Other stocks in the green, SBI, HDFC, Bajaj Auto, M&M, Z Entertainment, all of them are up almost 1%, 0.7. What's in the red are the oil stocks, obviously, because crude went up a bit. So HP, BP, IOC are down about 1%. Hero, Moto, Grasim, ITC are the other ones with minor red shades. But it's a green morning. It's 0.6 higher, and 11,310 is here.
Okay, well, it's a good opening for the mid-caps too, Lata. So up about 0.6%. 950 stocks on the advancing side. Look at that. Emphasis is a big mover, up about 4%. But don't lose sight of PVR. Just pull up PVR. Of course, it's been under pressure for many reasons, as we know. Look at that big bounce back this morning because of the Paytm deal. 7% higher now on PVR, up about 80 odd rupees. Talking about the list of gainers, emphasis on that impending buyback is up in the green. You have a couple of these names, the Indiabulls Housing that you spoke about, Torrent Pharma, Ramco, Time Technoplast, all doing pretty well actually this morning post the numbers. So Torrent Pharma up almost about 1%. Some follow-on buying seen in names like HEG. HEG is up about 2% now. It's been a stellar mover all of this week. Ashok Leyland is seeing some buying as well. Apollo Tyres, some follow-on buying post its numbers. So looking pretty good over there. Bharat Forge ahead of numbers is up almost about 2%. And a couple of more names from the pharmaceutical space, Cadila Health, etc. Let's take a look at Manpasand and what it's doing this morning. Some clarifications coming in from the management on a new auditor before the next quarter results are out. So up 2.5% there. And Capital First, very good set of numbers. So that one will also be in focus today. I saw a green tick on Capital First. Yes, 3.5% higher there.
On IDFC Bank is equally green.
Yeah, okay.
So I guess whatever the good work that Capital First does will reflect on
IDFC Bank. Yes, 3% higher actually on IDFC Bank as well. On the flip side though, just take a look at Jet Airways because over there's plenty of pressure. And this morning, Jet Airways is down 5%. In fact, big volumes getting traded there. Would be interesting to see what's happening with Interglobe and SpiceJet. Both are down. Interglobe, of course, is seeing more pressure post its disappointing numbers. SpiceJet ahead of numbers, under pressure. So only that pocket is not looking good. X of that, the market is in a good space.
Absolutely. 11,310 as we speak. That's where it just like kind of found a roof. Ashwini, what's the sense now? At 11,310, there was a bit of selling, but it's all in the first 2 minutes.
It doesn't look like a runaway sort of move. So I think individual stocks, maybe you can take a Jet on the downside and possibly look at Indiabulls Housing on the upside. Other than that, I don't think we are making any headway in any direction. We need to get past that 11,340, 340 zone on the Nifty futures. Similarly, Bank Nifty, again, we haven't gotten past, say, 27,550 thereabouts. So I would wait before I, make any judgment.
Okay. Mitesh, anything that you have spotted now, early morning?
These are two stocks, Lata. Capital first, I think Sonia was also highlighting good gap up opening. The structure is quite positive. I think keeping a stop at 550 or just below it, I think this can be a good trade for 595 kind of a target. And amongst the pharma names, I've added Glenmark to my list. I think that's something which is showing positive traction early in the trade and can head towards 625, 630 in the next few days.
Okay, PVR is really the stock of the moment now, about 7% higher. Prakash Gaba, any thoughts on the market opening? Steady opening. And what would you do with the stock like PVR now?
PVR looks that it can go up, more of a reactive up move, and I think 1220, 1240 is possible. Market opening, I would wait for a dip to buy. I don't know about Nifty, but Bank Nifty, if I get problems, possibly closer to 27,420 or so, then there could be a buying opportunity. So far, it looks like a squeezed up open. Does it settle here? If it takes out high, we buy. I like two stocks here. We've spoken already about Dr. Reddy, so I'll avoid that. Reliance certainly is looking good. I think it's heading to levels closer to 1200 zones. And I also like Hero Motors. It's holding out. We saw 2 days of correction. I think the uptrend is still resuming. And perhaps we'll see 3,350 to 3,400 zones the days to come. Hero Motors looks good.
Okay. Well, the morning certainly is holding for the moment, though. I mean, the technical call is that it's not looking like a big day. Ashwini, once again, it's 72 points higher now, 11,316. You would still say not the index, but elsewhere?
See, the test of the market will come once we see somewhat of a sell-off or an attempt by the bears to take the market lower. If they are not able to break today's low, then that will give you a direction that we should probably buy into this dip. For the moment, it's opened up, but there is no evidence of big follow-through. So let's wait it out. If 11,300 is held, then the question of buying would come in.
Okay, what's the big call? Stock call of the day?
Stock call wise, I think Indiabulls Housing Finance, given that housing finance was in a great deal of trouble or perceived to be in trouble, I think the housing finance space on the back of Indiabulls Housing could do well today.
Okay, well, Bharat Forge should come up for you. The Class 8 truck orders for July is out. Actually, it comes out from these research agencies across, like FTR, ACT, etc. The North America Class 8 truck orders, and they're looking pretty good. It's an all-time monthly high that we've seen in July. It soared past 52,000. We'll get them to flash it for you in a bit. And ACT Research that conducts this, this survey says that July's activity in Class 8 truck orders was nearly triple that of July of 2017. And what makes this even more spectacular is that July typically is the weakest order intake month of the year, and it's looking very strong this time around. So I guess that's the reason why, look at Bharat Forge now, Lata, it's up, it's suddenly in the last 5-10 minutes, it has spiked up.
Yes.
Perhaps because, that news flow.
Perhaps because you read out that news flow. And now, of course, everyone knows that that Class 8 truck orders this month as well has been good. All right, gentlemen, thank you very much for joining us and staying with us through pre-market and giving us opening bids. We will have to thank you and we'll invite you again a little before 10. It looks at the moment that the initiative is with the bulls, but let's see when the bears maul and when the bears attack. With this backdrop, the market up 2/3 of a percentage point, irrespective of which index you pick, Sensex, Nifty, Nifty Bank or midcaps. We invite our market master for the day. Ashwini Agarwal, co-founder and partner of Ashmore Investment Management, India LLP, joins us now. Ashwini, good morning, and I can't tell you what a pleasure it is hosting you on CNBC TV18. Well, first up, we are at all-time highs.
Good morning, Lata.
All-time highs make you uncomfortable buying, or do you think the earnings have proved a point and therefore it's good to buy these levels?
So, indices often don't tell the full picture, right? If you look at the index and you break down the performance of the index, it's been held up year to date by a handful of stocks. And there's a large number of stocks, in the index, in the large cap index, as well as in the mid cap and the small cap indices, which have actually done quite poorly. So the question to my mind is that this market is giving you a lot of opportunities from a stock picking perspective, because there are lots of stocks that are down, earnings are coming through, valuations are reasonable, And of course, there are some global risks on the horizon. There is politics in India, and you have to deal with all of that. But on the whole, I feel quite excited. As I had mentioned before, in the early June, conversation that we had, that I feel more excited, and I find more opportunities today than I was finding, say 6 months ago or 7 months ago. So I think that one shouldn't get fazed by the all-time high of the index, and one should focus a lot more on individual stocks and where the opportunities lie.
Okay, Ashwini, hi, good morning. Always a pleasure speaking with you. Good to hear that you're excited about the Indian markets. What makes you so optimistic? Are you seeing a recovery in earnings? And if yes, what kind of earnings growth are you penciling in for the markets or for the Sensex over the next 1 to 2 years?
So if you look at the Nifty, so for Nifty, we expect an earnings growth which is a little over 20% for the current financial year. Next year is still, of course, a little bit further away, but if you pencil in estimates that sound reasonable, you should still get to about 18 to 20% next year as well. A big driver of the earnings this year is going to be the industrial banks, where we are seeing stabilization of slippages in some of the large industrial banks. And hopefully the provisioning requirement will start to fall off significantly as we head into Q3 and Q4 of this year. Domestic consumer continues to be quite strong, where we are seeing significant traction in demand. Margins have been quite robust, so that should do well. I think even in healthcare, the earnings are starting to bottom out. You might see another quarter or two of pain for 1 or 2 companies which have large molecules that go off exclusivity. But I think on the whole for the sector, you should start to see significant earnings growth as you proceed later into the year. IT services, you've seen pretty decent growth. So growth is there. I mean, it's not bad. It's very well spread. It's high quality growth. It's not coming from other income. It's not coming from unsustainable drivers. So there is so what excites me is the broad base of growth. What excites me is the strong balance sheets that companies have, and what excites me is the fact that business activity is beginning to look up.
What did you say about corporate lenders? Are you impressed that the bad news is over? Are you buying the distress?
So, what I said about industrial lenders is that you are starting to see stabilization of gross NPL levels, which effectively means that sooner than later they will get to a point where they're very comfortable on the aggregate provisioning. All right. We've obviously seen some delays in resolution through the NCLT process, but as we go forward, I expect that the credit costs will start to fall off significantly.
Okay. Ashwini, you are very optimistic on growth, but there are people who have come on the channel and said that if you looked at the current years, especially FMCG or consumption growth, it looks great because last year same time was pathetic. Yeah. For instance, in Marico, last quarter, same quarter last year was minus 9% volume, and therefore it is 12% now. But if you do a CAGR over 3 years, we are where we were in 2016. That's not really called growth. What's your answer to that? Do you think we're only looking good on year terms?
So, you have to look at sequential. You're right, year on year makes less sense, especially because the base period had a lot of destocking ahead of the start of the GST regime on 1st of July 2017. So year on year makes less sense. But if you look at sequential growth, I think, on a broad range of consumer facing businesses, be it automobiles, be it farm equipment, be it consumers, you are starting to see reasonable traction in growth. Now, what happens in individual companies could be a function of how their products are positioned, what the competition is doing, and so on and so forth. The point that I'm trying to make is that the consumer seems to be in a good shape. Now, over the last 1 year, if you think about it, there has been a significant wage revision from the for government employees. So that has fed through to consumption. But what we are starting to see is a pickup in investment activity. So if you look at, for example, the results from one of the large engineering conglomerates and what they've said about new order inflows and what they've said about order execution, it appears to me that in addition to the government capital expenditure, the private sector capital expenditure has started to pick up. If you read between the lines of what RBI said a couple of days ago, they are clearly indicating that capacity utilization across the board is picking up. You're starting to see closing of the output gap. So to that extent, it is reasonable to expect the private sector capex to pick up. So if you add everything together, and we've got election spending ahead of us, we've got the full benefits of the GST still ahead of us. So one has to remain reasonably optimistic about demand conditions in India. Of course, what can derail this completely is, let's say, if the monsoon just rolls over and dies between now and the end of September, that's a risk. Of course, something can happen at a global level which can throw a spanner in the works on the overall sentiment, international financing, exchange rates. Yes, all these are risks. But as I see things today, I'm not terribly concerned that domestic demand conditions are not improving.
Has the view on India from the FII community picked up now compared to what we've seen over the last 6 months?
So if you just look at the data, right, the data tells you a story. So if you look at data between April and June, every week you saw almost $1 billion of outflows. Across these 3 months, net FII outflow across fixed income and equities was close to $9 billion. If you follow the weekly figures for the last 3 weeks, starting with the end of June, you've actually started to see a tapering down of those sell flows. I mean, if the numbers are telling a story, the narrative seems to be that the worst is behind us. Having said this, in large institutional houses anywhere in the world, they are driven by what the underlying client activity is and what the global news flow is, and so on and so forth. So again, there are risks globally which are not completely understood at this point in time. How does the US-China trade rhetoric pan out? What happens to oil? So all these are risks. So I can't with great amount of certainty say that the worst is behind us, but the numbers seem to tell us a story which seems to be that FII flows are stabilizing.
Okay, well, on that note then, why don't you just give us your idea of the global scenario itself, or the Ashmore view. The dollar today is 95.2. There is always this fear every time there is a trumpeting of tariff challenges. You see the dollar strengthening, and all the Asian EM markets, especially China, going into a cocoon, looking like bear markets. This is a real and persistent fear. Some tariffs have already been passed. Would you worry that that danger remains for the world, for global equities in general and EM equities in particular?
So, if you speak to Jan Den, my colleague in London who follows global economics, and our views on emerging markets are stated by him in various media interactions. I mean, his view is that if you fundamentally think about emerging markets today, the balance sheets, external balances, trade deficits, fiscal deficits are actually much stronger than what they were at any time over the last 10 years. So if you think through taper tantrums, take India, for example, right? We had 5% plus fiscal deficit, we have 5% plus current account deficit. Where are we today? I mean, both those indicators are looking quite healthy. So, of course, there are some 1 or 2 countries which are still struggling, be it Turkey, be it Argentina. But if you look at a broad spectrum of large emerging markets, they are actually in a much healthier place than where they were, during the taper tantrum years, or even through the European debt crisis. So our sense is that, you know, one has to focus on fundamentals, and the fundamentals of emerging market economies today are a lot stronger than what they have been any time in the post-financial crisis period. So yes, there is a sentiment that is doing a yo-yo given on you know, all the news flow that you spoke about, but fundamentally things should assert themselves in the longer horizon. You know, that's our call. So if you think, if you're willing to look through the volatility, I mean, emerging market assets should be a good place to be. That's our sense.
Okay. You know, just coming back to that consumption argument, the one piece of this consumption basket has started to slow down a tad bit. Within the auto space, you've seen some of the market leaders like, say, a Maruti or an Eicher Motors slow down in terms of their growth rates. Is this just, you know, because of the base effect, because of the GST transition you had last year, or do you see any kind of structural problem in some of these names?
See, we have 1 month's data point, right? We are looking at July numbers, and we are wondering if this is a longer term trend. I would say that, you know, let's wait a little bit because what you saw last year was that June sales were depressed ahead of the GST imposition, and there was a pickup in demand in July. So on a year-on-year basis, you know, there is an effect that kind of amplifies the slowdown. Month-on-month also, you've seen stabilization rather than growth, but you know, I'm reluctant to read into 1 month's figures, and I would say that, you know, we have to wait for a couple of months for a trend to emerge. Obviously, you know, we can make an argument that consumer durable sales should slow down from here because the wage effect on government employees is behind us, and you know, we already have a very high base, etc., etc. So one can build an argument, one can build a narrative. But on a broad basis, demand conditions seem to be reasonably okay, especially on the consumer side, and these are consumer discretionary items. So I'm not worried right now. Of course, I could be wrong. You know, this is my perception, and if data changes, then I will have to change my mind. So that can always happen. But at this moment, I'm not willing to call it the end of the consumer story for now.
Okay. Ashwini Agarwal, it's always a pleasure having you with us on the channel. Thank you very much for joining us. Have a great weekend.
Okay.
So that's a very positive word coming actually from Ashmore. Long-time investors in India know the market very well and extremely confident about the consumption space. And that's why we have a consumption giant with us now. The Godrej consumer stock is at a near record high. The Q1 numbers were in line with expectations, and expectations are usually high for Godrej consumer. The company also said it expects recovery in the consumer demand to sustain. They are betting big on FY19 in terms of new launches. Vivek Gambhir, Managing Director and CEO of Godrej Consumer, joins us now. Good morning, Vivek. Always a pleasure having you with us. You know, there have been some mind-boggling volume numbers posted by everybody. You have done, I guess, about... okay, your volume growth is 14% compared to expectations of 10 to 12%. Is this to a large extent because of a low base? If you remove the base and adjust it, what may be the annual growth that you can post?
Yeah. Good morning. I think, Lata, as you clearly mentioned, it's very important to look at these numbers from a 2-year CAGR basis, given the low base quarter. So on a 2-year CAGR basis, our numbers were trending closer to an 8% volume growth. Our belief is that on a 2-year CAGR basis, the industry growth would have been around 6% or so. But I think if the current trend continues with improvement in demand, particularly on the rural side of things, our expectation is that demand for the industry as a whole, volume demand should be somewhere between 8 to 10%.
Okay.
And if you add a little bit of price-led growth, which would probably happen in the second half of the year, this could be a year where for the industry, you could see a growth of about 10 to 12%. So certainly things are improving and heading in the right direction.
Just give us a little bit of perspective, since you will be looking at this market for over many years. This CAGR of 6% for the industry and 8% for your company, How does this compare with, say, a slightly longer period, if you looked at probably from 2012 to 2016? What I'm trying to say is there a bounce which is better? Can we expect this to even do better?
So if you look at the period between 2012 to 2015, during that time, volume growth was around about 10% or so.
Okay.
Between 15 and 17, growth had dropped down to 4 to 5%. And also during the early 2011-12, there was a certain amount of higher price-led growth as well, which hasn't happened in the industry. So we still haven't gotten back to the period from say 5 years ago. But certainly, I think if we can get to 8 to 10% volume growth, that would be a very positive trend for the industry.
Okay, 8 to 10% overall volume growth. Vivek, hi, good morning. I want to talk about the household insecticide segment because there the growth rates have been phenomenal for you. And we have seen some competition from startups, from new brands like D&D, etc. But despite that, your growth has been, what, 17% this time. Tell us a little bit about what the innovation pipeline is looking like. What kind of brand investments are you making in the household insecticide segment and whether you'll be able to sustain this run rate?
We are a market leader in insecticides with over 50% share in the market. And a lot of the growth in this segment is driven by a constant thrust on innovations. And so over the last 2 or 3 months, we've launched some fairly game-changing innovations. We've launched Goodnight Power Chip, we've launched a Green Shakti coil, and we've launched a liquid vaporizer machine with 50% more power. Over the next 2 or 3 months, there are 2 or 3 more innovations planned. Our innovations will straddle all the formats at various price points. Along with the focus on distribution, we feel very confident that we will be able to continue sustaining a share in this category. The big opportunity here is that the rural market is only about 35% penetrated. And so rather than talking about share gains from existing players, the big opportunity for us is to grow the category and develop the market. And that's where all of our efforts are focused on.
Okay. When you were speaking to us about volume, you said you will expect 8 to 10% growth and plus higher EPS or higher earnings because you will have a little more by way of price increases. You're sure you can push that through? There is enough demand to be able to push price increases, and where will they come? Will they come in oil, soaps, insecticides?
I think we'll have to just wait and see because pricing changes depend both in terms of what our cost situation is and what the competitive environment is, which is why I think in the latter half of the year we do believe there will be some opportunity to pass on some price increases. Typically we do this through new innovations, new variants, playing the portfolio in a much more systematic manner. But I think the reality is, Lata, is that if you look at input costs, for us, the 2 biggest input costs that we worry about are palm oil and crude oil. The palm oil situation is expected to be benign over the next few months, so I don't expect any pricing action on the soaps front. Crude is an indirect variable for us, but it affects a lot of other inputs such as packaging, some other inputs, etc. In that basket, and typically crude affects about 40 to 50% of our cost bar. There we are seeing about a 5 to 8% increase, though we have certain contracts already locked in. But as those prices increase, the first focus will be on trying to get our costs down. But I think if we need to take some selective price increases down the road, we will look at them. The focus in the near term will still be on volume growth. Okay. And we still feel very comfortable that in spite of this inflation in costs, our profit growth for the year should be ahead of revenue growth, and you will see margin expansion from us.
Okay. Now, for that big statement you made to the analysts, fiscal year 2019 will be most active in terms of new launches. Give us some color on it, or should I say hair color on it?
Across the board, you will see us with launches in insecticides, in personal care, in hair color. And if you look at our track record, we have been the innovation leaders in our categories. And so across the board, while I can't talk specifics, suffice it to say that a lot of our focus will be on some very exciting game-changing new launches.
Okay, within the soaps and the hair color segment, you've been gaining market share and you've delivered double-digit volume growth. Is a lot of this coming because of aggression in terms of marketing spends? Because that's what we're hearing from a lot of other market participants as well, that the entire sector is now going up on marketing spends. What are your own thoughts on that? What are your own thoughts on that?
See, if you look at our advertising spend last quarter, it was 11.7% of sales. So typically our advertising spend ranges between 11 to 12%. And I think we are quite comfortable with that. And so our intent again is to be very competitive as far as advertising spend is concerned. But you know, we are not seeing a significant dial-up in trade promotions, for instance. That happened about a year ago. So far, I think a lot of players are investing in brand building and innovations, which I think is the right way to build demand and the categories.
Okay. The only niggling worry is the international business and the little bit of a slowdown that we've seen over there. In fact, this time as well, your constant currency revenue grew just about 7% year on year. I think it's Indonesia that's been a pain point for you. Can you tell us what the prognosis is for the international business?
Indonesia is on a strong path to recovery. Even in the last quarter, our growth rate was 10%, which was far better than most other players in the industry. I think if the current momentum in Indonesia continues, this should be a strong year of recovery for Indonesia. Africa had a slightly softer quarter, primarily driven by a very bad macroeconomic situation in South Africa. West Africa has done well for us. Kenya has been recovering well. So our expectation would be is that the second half for Africa should be much better than the first half of this year. If the Indonesia recovery continues, that should mean a good year for international as well.
Okay, all the best, Vivek, with all the new launches and, you know, even the recovery in the international business. That's Godrej Consumers, a stock that has created a lot of wealth for shareholders in the past. In fact, it's sitting at a record high. We'll take a short break on that note. Up next, back to earnings when we return. Rupesh Shah, the Executive Director of Symphony, will be with us.